Hi, and welcome to Tax Talk UK. I'm going to talk about corporation tax. And before I do, if I could just ask you to take a moment to please subscribe to our YouTube channel and turn on the notifications. That way, if you need to refer back to this information or you want to look at the other guidance videos that we have for other areas of managing your small business and taxes, then you'll be able to find it easily. Thank you very much. So corporation tax then. So if you decide to trade as a limited company and set up a limited company, you will need to pay corporation tax on the company's profits, on the sale of any assets, and on any money that your company makes from investments. You must register for corporation tax once your company starts trading, or if it resumes trading, if it's been dormant. At the end of your company's financial year, you must submit a company tax return to HMRC to work out how much tax liability you're due for corporation tax. And that, of course, is in addition to a self-assessment tax return that you may need to submit as an individual, as a director or a shareholder of the company. And you must also submit annual accounts to Companies House, in addition to the company tax return to HMRC. Your financial year end will be the end of the month of incorporation, unless this is changed. And your accounting period will normally be the same 12 months as your financial year. So if, for example, you incorporate a company in the middle of June, then your financial year end ordinarily will be the 30th of June, and that will carry forward year on until any such time that that is changed. Your corporation tax liability, the tax that's due, must normally be paid within 9 months and 1 day after the end date of your financial year. And the company tax return must be filed within 12 months of the end of the accounting period. So often we would suggest that you get your company tax return submitted before you pay the liability to ensure that it's correct, and therefore aim to do that within 9 months of the end of the financial year. Certainly for the audience that would be watching our videos, which would, as a limited company, would be micro entity companies, very simple. If your company doesn't carry on any trade within a financial year, this is known as being dormant. You will need to submit dormant accounts to Companies House, and you will also need to notify HMRC that your company was dormant so that they know not to expect a company tax return for that period. Late submission penalties are applied by both Companies House and HMRC, so falling behind with your submissions can be costly. So corporation tax applies to the profits from your company, and if you remember, your company is a completely separate entity, so you therefore will need to be assessed completely separate for any personal income that you have had from the company. In the description, I'm going to pop the link where you can read more about corporation tax on gov.uk if you have any more detailed technical queries or things that you want to research. HMRC also have a helpline for corporation tax, and this is open Monday to Friday from 8 AM till 6 PM, where you can receive individual advice on your corporation tax affairs. When calling, you will need to have your company UTR number to hand. And as we've talked about previously, remember that the company is a separate entity, and therefore your company has a separate UTR number, that's unique tax reference number, to yourself. So this is a really basic overview on corporation tax, just to give you an insight as to whether it's something that you need to look at and whether you're going to be liable for yourself. That we hope that this has helped you. And as I mentioned previously, if you could please subscribe to our channel, and thank you. Goodbye.